Even if you have a small shift demand for oil outside of the dollar, some type of arbitrage gold play, the gold price will go up significantly. We're talking this year, we're thinking for a number of reasons, many in our industry are targeting at least 2,500, but that to me is conservative. Again, don't ask me to time it. Gold never moves in a straight line. The direction, though, between the BRICS, between the central bank, between the petrodollar, not to mention just the U.S.'s massive debt spending. It's an election year. They're going to deficit spend. We went from 33 to 34 trillion quickly. We'll go to 35 and 36 trillion just as quickly. The central bank purchasing of gold over U.S. treasuries, the weaknesses I see in the petrodollar, the momentum I see there, the weaponized U.S. dollar, all of these things point inevitably towards higher gold prices.
In the realm of precious metals, there's a buzz among industry experts, with many anticipating gold to hit a minimum of $2,500, and some believe it could soar even higher. Matthew Piepenburg, a partner at Von Greyerz AG, sheds light on the factors influencing this upward trajectory. Gold price builds on the previous day's recovery from the vicinity of the $2,000 psychological mark, or its lowest level since December 13th, and gains positive traction for the second straight day on Friday. Last year, discussions circulated about the possibility of BRICS nations creating a gold-backed currency. While this prospect didn't materialize, Piepenburg emphasizes that a gold-backed currency isn't essential for gold to play a pivotal role in trade among these nations. Instead, he likens it to a sophisticated form of bartering. The growing influence of the BRICS coalition, mainly its focus on a gold-backed currency, is seen as a catalyst for future increases in the price of gold. With recent additions, including Iran, Egypt, Ethiopia, Saudi Arabia, and the United Arab Emirates, BRICS is set to double global oil production and represent over half of the world's population. Piepenburg argues that even a slight shift in oil demand away from the US dollar and strategic gold trading could substantially boost gold prices, potentially surpassing $2,500 this year. What adds to the challenge for the US dollar is that BRICS nations conduct their trades outside it. This move enhances the value of the currencies used by the bloc, while exerting downward pressure on the US dollar. As a result, the battle for currency supremacy emerges as a crucial dynamic in BRICS' ongoing strategy to challenge the dominance of the US dollar in 2024. Join us as we delve into insights shared by Matthew Piepenburg. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
It's no longer the suggestion of 1975. We're seeing momentum in that direction. And again, I'm not saying it's an absolute depegging tomorrow or next year. It's already happening indirectly among the BRICS nations. They're finding ways to trade around the US dollar. And I said, even before the announcement when Saudi Arabia with the BRICS, and even during the summer of last year, everyone thought there was going to be a gold-backed BRICS currency. I never thought that was necessary or was going to happen. It wasn't because I'm particularly genius. It just wasn't necessary. You don't have to have a gold-backed BRICS currency to make gold an extremely important part in arbitraging trade among the BRICS. It's like a glorified barter. As I've said before this announcement, or even before the data came out on oil, you can play an arbitrage. You can sell oil in London. You can buy gold, ship that gold to a yuan-based trade hub, and you can convert that gold to yuan and then buy oil outside of the US dollar. And that was already happening among BRICS, certainly was happening between Russia and China. But other nations can do that as well. And you've got Saudi Arabia making deals behind the scenes or preparing to make deals where they can sell oil outside the dollar. Again, this isn't sensational. This is reality. And so even if you have, again, when you look at the global oil production, you look at global gold production, even if you have a small shift in demand for oil outside of the dollar and in some type of arbitrage gold play, the gold price will go up significantly. We're talking this year, we're thinking for a number of reasons, many in our industry are targeting at least 2,500, but that to me is conservative. Again, don't ask me to time it. Gold never moves in a straight line. The direction, though, between the BRICS, between the central banks, between the petrodollar, not to mention just the U.S.'s massive debt spending. It's an election year. They're going to deficit spend. We went from 33 to 34 trillion quickly. We'll go to 35 and 36 trillion just as quickly. So we're spending more than we earn. The combination of our monetary balance sheet, which is a banana republic, but for the fact the world reserve currency, the combination of that debt reality in the U.S., the election year spending that's coming, the central bank purchasing of gold over U.S. treasuries, the weaknesses I see in the petrodollar, the momentum I see there, the weaponized U.S. dollar, all of these things point inevitably towards higher gold prices. It's not because gold somehow got shinier or stronger or more immortal. It's just that currencies, including the US dollar, are getting weaker. And this is confirmed by the current events that we're seeing on the headlines and the current movements in the yield curve and the current movements of the Fed and the current movements of geopolitics. When you're talking $5,000, $6,000 gold, it's not to be cocky. That just means the cost of bread, the cost of a car, the cost of everything else is going to go up too, including the cost of stocks. It's going to be very bullish for the stock market too, when Powell officially goes from a promised projection of rate cuts to an actual rate cut and then goes to super QE, which I think he'll do. And like Luke Roman, I think it's inevitable. If they don't, if the Fed continues to raise rates and just is bluffing, gold wins either way, because if the Fed doesn't support the US Treasury market, everything breaks. Everything breaks but the dollar. The market breaks, it'll be a disaster. That will be depression. That will be a recession. But gold will still rise then. If the Fed pivots to super mega QE, which I do think they will, don't ask me what day, month, or quarter, but they will. They already have indirectly. That's good for gold too. Gold wins either way because the Fed is cornered. They can't win. They're going to sacrifice their currency to save the system, especially in an election year, but especially when you're looking down the barrel of 34 trillion, 35 trillion in public debt. Then you throw in unfunded liabilities, military budgets, fiscal dominance arguments. Again, it's not trying to be sensational. It's really, sadly, pretty obvious right now. I'm glad I'm in gold, but I saw this coming. We've seen this coming, but it's actually happening now at a faster pace.
In 2023, BRICS is actively pursuing de-dollarization, challenging the U.S. dollar's dominance in 2024. Despite the U.S. dollar's continued global supremacy, the BRICS bloc has surpassed the G7 nations in GDP and expanded its membership, positioning itself strategically for its de-dollarization agenda. Matthew Piepenburg notes that its hegemony is considered irreversibly compromised despite the U.S. dollar's ongoing dominance. The imposition of 2022 sanctions against Russia played a pivotal role, fostering closer ties between Russia and China and driving BRICS expansion. World Gold Council estimates that central bank demand boosted gold's 2023 performance by at least 10%. While projections for 2024 may not match those heights, above-trend buying is expected to continue supporting gold prices. Piepenburg highlights the unintended consequences of the Western strategy to weaponize the dollar against Putin. This perceived failure has eroded trust in the U.S. dollar as a neutral reserve asset, leading central banks to favor record purchases of physical gold over U.S. treasuries. Let's get back to the interview.
All these themes, the dollar, debt, currencies, weaponized dollar, the BRICS, they're all interrelated. And obviously, when the sanctions came out against Putin in 2022, I and many others were saying this was a game changer. This was a watershed moment. Grant Williams, Jim Rickards, many others. It was incredibly myopic policy on the West. This argument that Russia would run out of money before the West ran out of energy just proved to be untrue then and now confirmed to be untrue today as Poland goes nuclear and Germany's burning coal in the winters. So this idea that you could weaponize a world reserve currency was a disaster from the beginning. I said, like the de-dollarization or the decoupling of gold in 71, that the process would be slow. Just as Nixon welched on the gold standard in 71, the inherent purchasing power of the dollar got weaker and weaker and death by 1,000 cuts when measured against gold. And I said in a similar way, this weaponization of the world reserve currency, which again, Robert Triffin, Keynes warned against, even Barack Obama in 2015 said that would be a mistake. I said that would be a slow process, death by maybe 100 cuts in terms of the dollar's supremacy and hegemony. Its supremacy is still very much there. Its hegemony is irrevocably lost. And in 2022, from day one of the sanctions, we said that just pushes Russia and China closer together. It also incentivizes the BRICS to expand. And in just the brief period since 2022, the speed and scope of that expansion is happening faster than I thought. For the year of 2023, 20% of the oil sales were outside of the US dollar. You can't overestimate or underestimate or overstate the importance of that simple change. That's one example. When you have Russia selling oil now to China and China paying for that oil in yuan, which the Russians can then convert to gold on the Shanghai Gold Exchange, or when you see the 200-day moving average in the Shanghai Gold Exchange repricing gold differently than in London and New York, this de-dollarization process, not just between China and Russia, but among all the BRICS nations, which are de-dollarizing in the commodities market, You can't ignore the significance of that. You simply can't. And the speed in which it's happening is extraordinary. And, it's also even Saudi Arabia in the oil trade. It's very important. Saudi Arabia now does more trade with China than it does with the US and Europe combined. So these are important changes that are happening because no one trusts the US dollar as a neutral reserve asset anymore. Central banks are making record-breaking purchases of physical gold and not US treasuries. Since 2014, there's been over 100 billion negative in US treasuries and 500 billion up in physical gold among the central banks. These oil changes, this de-dollarization in the BRICS market, the size of the trades happening among the BRICS, the bilateral agreements outside of the US dollar, now well over 45 countries doing that. You can't ignore that. And the speed and scope of that, again, since 2022, since the West in general and the US in particular spearheaded this weaponized dollar against Putin, it has completely backfired. It was a headline-making attempt to destabilize the ruble and flex Western muscle, but the Western financial and military muscle just isn't what it was promised to be, not only on the battlefields of Ukraine, but in the U.S. Treasury markets and the central banks. We're seeing evidence of that objectively as a failed policy. It's not trying to be anti-American or non-patriotic. I think you have to be very patriotic and say we have to have better statesmen, better financial savvy when we're making political or international decisions like this. I think it was a fiasco, straight and simple. And it does, obviously, when you talk about the speed and scope of this de-dollarization, the arbitraging of gold in the commodity markets, the settling outside of the US dollar and physical precious metals, it's undeniable. It's not a gold bug or gold bull sensational headline. It's simply empirical, objective reality. And it has a massive impact, as we can discuss, on the US dollar.
The two most significant events for gold demand in 2023 were the collapse of Silicon Valley Bank and the Hamas attack on Israel. The WGC said, estimating that geopolitics added between 3% and 6% to gold's performance over the year. How do you view the battle for currency supremacy as a crucial dynamic in BRICS's ongoing strategy to challenge the dominance of the US dollar in 2024? And how might this impact the performance of gold in 2024? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.